Want to start our solution? So we'll start with topic 1, taxation of partnership. So what we have generally in partnership business? So partnership normally has 3 areas. So we have a partnership admission. I think also retirement can be done in the same admission of a partner or retirement admission. Admission or retirement, we have conversion. Into limited liability company. And then you have incomplete records in partnership. Any of these is potentially highly examinable. For admission and retirement, usually the adjustment is in the distribution schedule. You adjust based on timing. So the exam will expect you to prepare a complete statement of adjusted profit. And then when you come to the distribution will be adjusted based on the exact timings, like what were the dates. Usually the exam will tell you that profits and losses accrued equally throughout the year. Now that language will allow you to do the apportionment. And the apportionment will come in the distribution. So usually the adjustments are in the distribution. Adjustment usually in the distribution sheet. So you'll be told that revenues and expenses are accrued evenly. So whether it's retirement or admission, you'll be careful to notice the timing. When does this guy come in? Or when does the other guy leave? And then it will be the basis of share. Again, for conversion, there'll be timing again. The examiner must tell you that incomes and expenses are accrued equally. So there'll be exact date when the company is formed, because it's formed during the year. So you split the two. So normally a statement will be prepared in columnar form. So statement in columnar form. So the statement will have the beat, the column for partnership and a column for in columnar format for partnership, and then for limited liability company split, so that the revenues or whatever belongs to the company will come to the column in company, and whatever goes to whatever belongs to the limited liability company will go to the limited liability company. But in the end, for the partnership, you must again prepare a distribution. Only for the partnership, you prepare a distribution schedule. A distribution schedule will be for the partnership column. Only for the partnership column. For the limited company, if there is any income, the total income will be added to the company and subjected to the corporation tax rate. Then under incomplete records, this is where you're not given a statement and you'll be able to determine some missing items. So you use use of information to determine. Will determine missing items. Usually, you might need to look for credit sales. So you must know how to prepare maybe a debtor's account to work out the credit sales as a balancing item. Alternatively, you might still prepare sales using the other approach where you have cost of sales, then you add markup. Whichever way, or you might have to use the concept of markup, right? Markup and margin. You might need to use that concept of markup and margin. You might need to look at credit. You might also need to look for credit purchases. Then you need to make adjustments for accruals generally and repayments. You might also need to make adjustments for accruals and repayments. So generally, this is what we call partnership. Any question on partnership? Then we can take our first question. Our first question should be April 2022. I think it was question 3 or something. April 2022. Kama ilikuwa question 3. Let us see question 3. What's your need of it? April 2022. Yeah, question 2. It's called Amua and Beba. April 2022. April 2022. Question 2. Let's look at part A first. Describe 6 factors to be considered when developing mitigation strategies for taxation risks. So what factors would you consider in developing mitigation risks, mitigation strategies for taxation risks? So right for part A, factors to be considered when developing mitigation strategies. 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 For taxation risks. Factors to be considered when developing mitigation strategies for taxation risks. The first factor, the tax risk category. The tax risk category. The tax risk category. The tax risk category. Then you say this relates to whether it is compliance. This relates to whether it is compliance, operational. This relates to whether it is compliance, operational, transactional, management, or reputational risk. Management or reputational risk. Management or reputational risk. The next factor, the likelihood of the risk occurring. 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 Next factor, the potential impact. The potential impact of the risk. The potential impact of the risk if it occurs. The potential impact of the risk if it occurs. The potential impact of the risk if it occurs. Next factor, the urgency of addressing the risk. 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 Next factor, estimated cost to mitigate the specific risk. Estimated cost to mitigate the specific risk. Estimated cost to mitigate the specific risk. Next factor, resources available to the organization. 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 Next factor, the risk appetite of the organization. The risk appetite of the organization. The risk appetite of the organization. Next factor, the tax penalties. The potential tax penalties. The potential tax penalties. The potential tax penalties. Next, the available technology. The available technology. The available technology. Then B says, Amua and Beba have carried on business for the last several years under the trade name AB Partnership. They share profits and losses equally, with capital contributed earning interest at the rate of 10% per annum. The following details relate to AB Partnership. AB Partnership transactions for the year ended. Number one, Amua and Beba capital accounts reflect credit balances of 1,200,000 for each. Two, on 1st April, they introduced a new partner, Chanda, who was to contribute 1,200,000 as his share of capital. They agreed on this day to share profits and losses in the ratio of capital contributed proportional to the period of the year it was invested, and that this sharing ratio be backdated to the start of the year. 3, the cost incurred during the year were as follows: salaries and wages for staff, electricity and telephone, repairs and maintenance, depreciation and impairments, general insurance, debenture interest paid by ABC Limited, directors' fees including 507, 720, partner salaries, legal expenses, medical contributions for partners and directors, drawings by Amor, Beba and Chanda rent and rates, motor vehicle running expenses, printing and stationery. The following assets were purchased during the year: furniture and fittings, 192,000, and pickup at 2160,000. Now, during the months of the partnership, the total salaries to partners were 507,720. The salaries were to be apportioned according to the period each partner served in the partnership business. The cost of sales during the year was 21,600. Sales were uniform at a margin of 25%. The partnership was converted into a limited liability company, ABC Limited, on 1st July 2021, with the partners becoming the new directors of the company. The new firm was listed on the Securities Exchange, but not for purposes of raising additional capital. The costs incurred in listing were 100,000. 8, the sales and expenses accrued evenly throughout the year, unless otherwise stated. Required 1, a schedule showing separately the profit or loss for a partnership and the company for the year ended 31st December. 2, tax payable or refundable for the year ended from the profit or loss computed, and a schedule showing the distribution of profits among the partners. So in this question, we are preparing from scratch. So the first thing would be to look for sales, and we have to keep in mind the period of operation of the partnership and that of the company. Yeah? So as far as the company is concerned, the conversion is in note 7. The partnership was converted into an LLC or limited liability company, ABC, on 1st July. So we have 6 months and 6 months. So prepare a statement, but meantime, I want you to look for sales. Able to afford sales. So this is a case of conversion. So we'll have 2 columns. Which one? Admission. Admission is done in the distribution, not in the state. Admission or retirement is, the adjustment is not done in the distribution. You first have to prepare the statement first. So what did you get as sales? You have to look for sales first. So, if you look at note 6, it has cost of sales of 21. Let's see. So we are looking for sales. So we have cost of sales, and cost of sales is 21,600. Sales were at a uniform. Sales were uniform, a margin of 25%, but this is cost of sales. We have to look for markup. So what is markup? If margin is 25%, markup is? Markup ni ngapi? That small thing can make you get stuck. Eh? So if your markup and margin, if you convert markup as a fraction is 1 over n, margin will be 1 over n plus 1. This one is margin. 25% is 1 over 4. Is it? 25 over 100 is 1 over 4. So markup is 1 over 3. Is 1 over 4 minus 1. So 33.5%. So what is 33.5% of 21,600? That would be the markup. That 33.5% of ngapi? $7,200. So markup at 33.5% is 7,200. That gives you sales. 28,800. The timing was in note 7. So ABC is from July. So January to June is 6 months. So everything accrues equally. We see sales. $28,800 will be 14,400. Then you still have cost of sales. Cost of sales we have is 21,600. This will be 10,800. Gross profit. And when you reach gross profit, you look for any trading income, like if they have discounts, which you can add to the gross profit, discounts received or realized, foreign exchange gain, or insurance compensation for stock. Now, this question does not have any of those things. So simply lessen expenses. So on note 8, the sales and expenses also accrued evenly throughout the year. So you lessen here allowable expenses. So lessen allowable expenses. Salaries and wages for staff. Note 5 says, during the month of the partnership, the total salaries to the partners were that. The salaries were to be apportioned. That is not allowable. I was looking for any adjustments on salaries, but for salaries for staff, I do not have any adjustments. It's allowed for staff. So salaries for staff is 1083. So 1083, if you divide by 2, you get how much? It's half. They accrued equally. 541. 5 plus 41 plus 5. Then you have electricity and telephone. Electricity and telephone. They will not have any adjustment either. We just say electricity. Electricity and telephone. Half of that amount is 190. So 194.7. Then repairs and maintenance. Just do an apportionment. Repairs and maintenance cost. Again, you get half of the half itakuwa ngapi? Repairs and maintenance is 294.147. Depreciation and impairment is not allowable. General insurance, are they saying anything about general insurance? No. So general insurance will bring in general insurance, half of that would be how much? 235. Now, the debenture interest that the examiner is very friendly and Akwambia was paid by ABC Limited. So you charge the whole of it to ABC, it's allowable. So the debenture interest. Debenture interest to ABC is 150. Director's fees, wanasema including partner salaries. So utatoa partner salaries is not allowable. Then director's fees will only charge the company. So director's fees. You take the whole amount, 1015, 550 unatoa for 507.72. Unapata ngapi? 507. 507.72, that's the director's fees. We have legal fees. Half of legal fees in the contracting. half of 510 to 40. Umesema ni 255.12. Then medical contributions for partners and directors, we'll just deduct it because we have no way of splitting it. So medical contributions. Otherwise, kama tungekuwa tunajua ya partners, tungeondoa. Unajua kwa nini? Ingetreatiwa as personal. But you know, for a company, it's allowed. But sasa wajetuambia what part is for partners and what part is for directors. We just deduct medical contributions. So 651 and 40, half itakuwa ngapi? Nasema? 325.92. So 325.92. Drawings are not allowable. Then we bring in rent and rates. So rent and rates, half of 315, and 16 is nothing. 157.98. Motor vehicle expenses. $250. 250.8. Printing and stationery. Printing and stationery nasema ni 16.26. Yeah. Then they have assets. They have assets in note 4, furniture and fittings. We need to get allowances for that. Then there's also note number 7. The partnership was converted into a limited liability company with the partners becoming the new director of the company. The new firm was listed on the Securities Exchange, but not for purposes of raising additional capital. The costs incurred for listing are allowable. So, listing costs incurred for listing at NSE. Now, those were costs incurred by the company. Cost incurred for listing. Then we calculate investment allowances for, is it only furniture and fittings? No, furniture and fittings and pickup. So investment allowances. So we have furniture and fittings. So for furniture and fittings, we get 10% or 192. So 192 times 10%, 19.2, you get half of that. 9.6. 9.6. Then we have for pickup. We get 25% of 160. 25% is 40, yeah? 40. 25% is 40, then half would be 20. 20. So that should give you, they don't have any other income. So the whole thing ends there. That gives you the profit or loss for each, the company and for the pickup is 2 million. 2160, minimum 160. So 2,160,000. 2160, you get 25% of that, 540. $540 is 270 and 270. So you can get the profit for each. Then you're going to prepare a distribution for the partnership. You try and prepare the distribution schedule for the partnership.
Sawa. Unapata hivyo?
Pata hivyo. Napata alama.
For 36. For 37.
Yeah, 36.
Mimi kwanza exam yangu ina hata nikikuonyesha sasa hivi nimesema kabisa. Nilienda huko wakaniambia tumerudia.
Sasa kwa nini kafe? Bwana kwa mesa.
Hata wameniandikia pia. Nasema ikipatikana hapa kwa portal nimesema ikipatikana. Penye nilienda huko. Nilienda tulianda.
Sonia kama
FM ya leo. FM sasa hiyo. But FM ni kwa najua ni tatizo. Ila ndio nataka walicheza hapo.
Jana bwana kwa mesa na ulisaini.
Hata sasa hiyo television inasema kabisa.
Na ulisaini. Sio kwa
Nilisaini yangu. Nilisaini kila kitu.
Alafu kurudia unalipa.
Hata
wakaenda kwa hiyo form.
Nililipa wanaona nilisaini.
Ndio kuambia kama nimesaini.
Kwa nini wewe ndio ulisaini?
Mimi si ndio nilikuwa nauliza.
Ndio shida anafanya kurudia basi.
Ndio.
Amelipa bwana.
Si hadi nikalipa. Sasa unaweza bishkat name. Walinizungusha. Uweze kusumbwana na watu. Sasa tu nitasema ilikuwa tu fail. Nifanye tena. Hapo alicheza.
So, how much for AB partnership? 1195.84. 1195.84. And this one? Still positive.
Yes.
437.76. Roman says a schedule showing separately the profit or loss for the partnership and for the company for the year. We've done that. Roman 2, tax payable refundable for ABC Limited from the profit or loss. So for the company, it's just corporation, tax liability. So for the company, Roman 2, we say corporation tax. So corporation tax liability will be 437, 760. You multiply by 30%, and 30% would be how much? Yes? 131. Then I want you to prepare the distribution sheet for the partnership. So this is where you adjust for the admission of, there's a partner that was admitted called Chanda in note 2, admitted on 1st April.
Go after 3 months.
3 months, divided by 2 months. Selesai 2 months. I have very fast. So,
So each of the 360.
we have salaries. We split the first 3 months. The first 3 months is generally up to March before Mua joins. Then there's another 3 months after Mua joins. The other 3 months is from 1st April up to June, when they convert into the limited liability company. So the total salaries will just share half for 3 months each. The total salaries is 507.72. Hiyo 507.72 na divide by 2 unapata hapa total ni 253.86 na huku pia ni 253.86. Sasa salaries for the first 2 partners the share 2 equal, so you get half of 253.86. 126. 93. So 126.9. And then ingine pia watashare equal for the period because they had equal capital contributions. So salaries now were 2 paid equally. So you 253.86 divided by 3. 24.62. 24.62. Yeah. 24.62. 24.62. Then we have interest on capital. Again, 3 months and 3 months. Now, interest on capital is supposed to be 10%, but per annum. Each one of them contributes capital of 1.2 each. So 10% for the whole year will be 120, but will apportion for only 3 months out of 12, which is a quarter. Yeah? So for 3 months, interest on capital for Mua is going to be a quarter of 120. A quarter is 3 over 12. 3 over 12 is 1 quarter. 1 quarter of 120 is 30 for 3 months. The other 3 months is still 30. This one is also 30 and 30. This one is just 30. 30 and 30 is 60. This one is 90. So the difference would be share of profit.
Drawings.
Drawings were added back. What we put here is interest on drawings, not drawings.
Oh, okay.
If there's interest on drawings, then you deduct from each partner as a cost. Interest on drawings. Hapa, kama ni drawings, kama tungekuwa tuna-adjust tunge-add back. But you see, this approach, we're only deducting allowable expenses. So drawings will not appear because it's not allowable. So share of profit, again, you split the same 3 months. Release space. So this is 11.95. So we might need some working note here, working two. It's a share of profit. So last 3 months. So we get salaries, and we're only using the total column. For the first 3 months is 253.86. And this is also 253.86. Then you have interest on capital. Interest on capital is 60, and this one is 90. Then you have share of profit. We get half of that profit. So 11. This is 597. The difference is 284. So the first 3 months, you know, next 3 months is 254. Same. $199. I hope if you add these three, you get that. 1195.84. That's it. So that is conversion. Any question? So I want to give you one on incomplete records to try before we look at another one on admission. Okay, let me just give you two, one on admission and the other one on incomplete record. The one for admission, we're going to look at, we'll try the one for December 2021, question 4B. December 2021, question 4B is on admission. That's on admission. And then the one for incomplete records, we could try Mokagani. For 2019. Yeah, it's November 2019. November 2019, question 1C. Union complete. November 2019. So you can try those two. Review both admission and incomplete records. Then we'll see which one to add depending on what we want to discuss more. We may see which other question to think about. The pilot kweli? You see pilot. December 2021 sio pilot. Kuna pilot na kuna ile sio pilot.
I've seen it.
You've seen, 4B.
Yeah, 4B.
Chana na Mary na Khadija. Na lipa na mali. Partnership. They both look fairly straightforward.
Is free tax, benefit tax.
Is
Free benefit tax.
free benefit tax. There is no tax that is allowed. None.
It is not it is a part of the post. So that 18%.
Huyu mtu anani hapo huwa gaona saa zingine wewe umeamua kuja physical na but saa zingine wewe kuja physical saa 8 lakini sio asubuhi. So I'm used to seeing you at 2, not in the morning.